Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elonin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Thursday. Welcome to Pre-Market Prep. Spencer Israel, Dennis Dick. Joel is out today for Yom Kippur. We wish him well. We wish his fast well. But I like you guys too much to take the day off. Can't stop, won't stop. A few headlines on our radar today. Number one, I think a broken record. Buy the dip, right? Guys, it worked again. Joel and I were talking about this yesterday. We'll check back in a week or so to see if the old saying "sell Rosh Hashanah, buy Yom Kippur" actually worked. But it seems like for the moment that it may have worked. We'll talk about buy the dip. We'll talk about EA. We'll talk about Tesla. We'll talk about BeyondMeat. All of those stocks moving this morning. All of those stocks have headlines this morning. Marc Chaikin is our first guest. He would join the show at 8:15. We'll be joined by Peter Tuchman at 9. So we got a lot going on. Everyone, do me a solid. First and foremost, hit that like button. Let's get up to 1,000 likes today. That's the goal. 1,000 likes. It's a big goal. Let's see if we can do it. Let's bring on some charts here. I did just mention buy the dip. I know we're a smidge in the red. We are a smidge down this morning in the overnight session, but let's be honest. Yesterday is the real story here, at least for me. Buy the dip, pretty much across the board. All the major indexes, all the sectors were in the green yesterday, except for utilities. So pretty good day across the board. Here's the S&Ps. You can see. Whoa, was that a? Oh, that's the 8 o'clock print. That's not a real print. But yeah, that green candle is weird there. But ignore that. Bottom line though, buying the dip is the theme of the day. And Dennis, you were feeling a little bit peckish today, wanting to buy some stocks.
I'm looking at yesterday's low.
Okay.
So I'm looking at nice kickback rally. We bucked the trend. Kramer mentioning last night, just that we've been having this theme of opening strong and closing weak, opening strong, closing weak, opening strong, closing weak, and then rallying overnight. Exact opposite thing happened here overnight, where we closed strong and now we're opening weak. So if we're just going with the whole, whatever the overnight traders do is the wrong way, which is what has been working for 4 straight days, you'd actually be buying the dip here this morning. So I am actually looking at buying the dip here. I would lean on yesterday's low. So if I'm looking at the SPY, that's a long ways away, way down at 443, 44. Oh, yeah. But also interested in the casinos here, not as long-term investments, although I have a little bit of LVS in my long-term portfolio, but more so just we're getting now another sell-off. They wanted to rally yesterday, but you get Johnny-come-lately analyst JP Morgan coming through, downgrading them all. Thank you so much for that, JP Morgan. So helpful. But LVS, WYND, also, which other ones? MLCO.
Melco, yep. Those were
Melco. So they actually finally had some relief pop in the afternoon yesterday. Now you get another whoosh where they get the downgrade here. I'm going to say if you wanted to try them, and this is just setting up trades. It's not a recommendation. We don't give recommendations, just trade ideas. I'd say if you're buying the dip today, stop yourself out at yesterday's lows. So for instance, LVS, buy 37.10. I stopped myself out at the 36.15, so you're risking yourself a buck. Yes, I do have LVS in the long-term portfolio, not on for a trade yet, but looking at just possible day trades here, where, okay, well, we get another flush. You have people, okay, I can't take it anymore. The downgrade again, I'm just getting out. I feel like today is going to be, and I might be wrong, and that's why if they take out the lows, I'm wrong. But I feel like yesterday they put the low in. So that's just what the bet is. So again, you can put any trade on as long as you know where your out is. Win now down $2.50 thanks to JP Morgan here. Market not helping too. But you have yesterday's low to lean on 82.55. So you're risking yourself about $1.20 here right now, but even $1.15 if you're able to pick it up, around the 83.65 where it is. Risking yourself a buck, and I'm not saying do it in the pre-market. Maybe you wait till the regular session, maybe you wait till the opening flush. But I wouldn't be surprised if these things maybe shrug off these downgrades, because it's not like all of a sudden out of the blue, JP Morgan comes on with a bold call and downgrades Wynn Resorts. Well, this is the opposite of a bold call. This is a late call. And sometimes on the late call allows you to get in, and not that, again, I'm not saying I don't know if the low of the low of the low is in. I'm just saying they wanted to rally yesterday afternoon. Now they get slapped in the face. Sometimes they pick themselves back up again. So stopping myself out on all these trades if I put them on. I don't have them on yet. If I put them on at yesterday's lows.
Well, it would be Market justice in a way if like the JP Morgan downgrade this morning marks the bottom.
It almost always happens that way. It's not even comic justice. It almost always happens that you get a bold call, not even bold. You get a late call from some analyst. And then all of a sudden, the game changes, and obviously, the thing turns around in the analyst's face. So there's the possibility. We don't know anything as traders. We just look at probabilities, possibilities. We make educated bets. Nothing's 100%, nothing's 0%. It's somewhere in the middle. Is there a chance that yesterday Wynn put in a short-term low? It's possible. I'm not saying it's probable. It's possible. So again, I can risk myself a buck to see that. If it takes it out, I lose a buck on the win. Again, you have to remember as traders, and there's so many people out there that will absolutely not take a loser. So some people are going to put this trade on 83.70, and then it's going to go down to 82 and 81. They're like, well, I'm not taking the loser now. And now you're stuck, and now you're bag holding. That's how a trade becomes, a long-term investment the bad way, and you get stuck bag holding it. So, you've got to have your out kind of coming in. Again, long-term investing is a different animal, but these would just be trades going into my short-term trading account and saying maybe there's the outside chance, and that it might, put in a low yesterday. Do I stop myself out right at the 82.55? I usually give a little wiggle room because it went to 82.45 and then rallied up. I'd be like, okay, I got stopped out for 10 cents. So sometimes you got to give yourself a little bit more than the low, but not a lot, like not 50 cents through it, maybe like 30 cents through it, just to make sure it doesn't put in a little sneaky little double bottom. And sometimes they do undercut, and rally. But let's look at Wynn. If we go back, to August the 19th, I'm not saying this is going to happen, but it could. You had an undercut and rally trick where it went down August 19th, low 87.52. The very next day, did not take out that low, held 87.81, and then rebounded. And there's a lot of overhead supply. I don't think this thing's rebounding to 100. I don't think it's rebounding to 95. Could it rebound to 90? There's the possibility that, there's an outside chance there. Again, this is you're still trying to catch the falling knife. But now you have a level to lean on. So it's different than yesterday where it's starting to make new lows. Now I have a defined risk. And this is something, we're going to talk about. We're going to do another educational event. Joel's going to talk about it when he comes back in October. We're going to talk about all different setups, and how I control the risk. Risk first, then return.
So you are interested potentially in buying in the dip in the casinos, leaning on yesterday's low as you're out. Are there other stocks you maybe you're looking at buying the dip on here?
Yeah, I think so. Again, you got to lean on the lows from yesterday. So it's a nice snapback rally. So when I see flush, I see a boom. Now I'm like, okay, well now I have a tradable bottom because I have that low end. I'm not trying to catch the falling knife. I'm saying potentially that it already fell, and now I can pick it up off the floor. If obviously it continues to fall, then I got to get out again though. So yeah, I'm looking at a number of different stocks. I had a whole bunch on my list. I was looking at Zynga even. I sold Zynga back before the quarter. I can't remember why. I think I sold it because of all the gaming stocks were just getting punished. Like Take-Two got hit. I was like, I'm not holding another gamer through a quarter. And it went from $10, we know, down to 8 on the disappointing results. And I had sold it at 10 a few days earlier. So basically scratching out a long term. Michael Pachter he picked it on our show. It's been a dog. I love Michael Pachter. He usually doesn't do me wrong in the long run. Sometimes I'm sure that they get. We know he's on Netflix.
I mean, he's been.
Everybody's right and wrong.
He's right and wrong. He's right and wrong.
Everybody's right and wrong. But I'm looking at Zynga. This is just such a huge level at $8. You're going back 777 back in October, November of 2020. I'm looking at the recent low 779. Now I'm looking at 793 recent low here just from a couple of days ago or yesterday. I'm thinking, can I, do I have some defined risk here? Sure, I do. 779. So maybe stop myself at 765, 770, risk myself 30, 40 cents to say, hey, maybe, I do a little bit of buy the dip in here too. So buy the dip was working yesterday. I don't feel like we're going to flush here today and be down like 500 Dow points. I don't feel that, but, I might be wrong.
Yeah. I want to, Freddie Mucklow took the words right out of my mouth here. I'll bring up his comment. And this is just with regards to Zynga buying the dip here. Why did it pop last week, right? It popped last week on the Apple Epic Games ruling, right? The court ruled that any mobile app company can go around the Apple Store, the Apple App Store, and does not necessarily have to fork over a 30% cut to Apple. That's why they got the pop. Basically every app-based company got a pop on that. But then the very next day gave back those gains.
Yeah.
So ask yourself why that happened. Ask yourself, like the market's telling you what it thinks, right? It's saying, it's still out of favor. Good news. Okay, fine. We got a favorable ruling that is being appealed now, but we don't really care.
We added more bag holders too, so it is a concern.
Yeah.
So again, these are all risky trades because they're not buying strength; they're buying weakness. It's always riskier to buy weakness.
Yeah.
We're in this market right now, though. There's not a lot of things to buy strength, and unless you're an Iron Net, which is the stock that has just been a monster. There's been a lot of stocks, on pullbacks. But are we buying overall weakness here? Or are we just buying a pullback? That's the question too. I mean, when I made the bet with Joel on Microsoft, which obviously helping me out with the buyback, I'm just looking at a stock that's in a clear uptrend, and it's pulled back a little bit off the highs, and I'm like, well, the trend probably persists.
Yeah.
So it's always easier to buy stocks that are in uptrends than it is in downtrends. So when I'm coming into these trades, these are completely contrarian bets, and I have a lot of contrarian in me, and sometimes you can time it right, and sometimes you don't. It is always easier to buy stocks that are going like in uptrends than downtrends. So just keep that in mind here too. High likelihood that I might get stopped out on all this stuff, but at least I have defined risk.
And it's funny how the turntables, if you're sitting here watching and you're thinking, wait, wasn't these guys were like pretty bearish the other week? Yeah, that's how it goes, right? It's like always changing, right? Always changing.
Well, as a trader, you have to.
Right.
So yesterday's move told me that, okay, we've got now, people, because 3 days in a row, it's been the same thing. Open higher, tank, open higher, tank, open higher, tank. Well, we had a different story yesterday. We opened and we came down near yesterday's low, and then we rallied all day.
Mm-hmm.
So, I mean, you've got to identify those changes. So now I get, the opening tank. I mean, with the contrarians have just been winning in this market as day traders. Again, these are day traders. You got to put your day trading, your long-term investing hat, and your swing trading hat. There's 3 different hats, but I'm basically wearing most of my day trading hat today, saying we're getting a pullback here in the S&P after a nice big rally yesterday. I feel like it's like profit taking from yesterday. I feel like we actually could, move higher. And then tomorrow we have such a huge day. We have option expiration. As you were saying, we have an S&P rebalance. We got a lot going on tomorrow too. So I think leaning on yesterday's lows as a trader is the prudent move here. So, that's the setup. Now, the setup sometimes works. It sometimes doesn't. Sometimes the market will pitch up the middle, and you'll foul it off. Sometimes you'll strike out on it still, even if it's up the middle. But I like swinging at the pitches that are up the middle as opposed to swinging the ones in the dirt. And I feel like the pullback today is a little bit, it looks like it's coming up the middle. Maybe it's going to slide out of the strike zone, but at least I got yesterday's lows to lean on.
I'm loving all the baseball metaphors here. And Boris says S&P rebalance is cool. Yes, it is, Boris. We'll talk more about that on tomorrow's show because it's going to happen mostly at the close tomorrow. Speaking of tomorrow's show, I want to plug that real quick. Tomorrow's guest is going to be Jay Snowden. Who's he? He's the CEO of Penn National Gaming, PENN. That'll be on tomorrow's show. So tell your neighbors, tell your friends, tell your cousin, your cousin's neighbor's friend, whatever. That'll be, if you have any questions you think we should ask, tweet at us, shoot me an email, shows@benzinga.com, and just put pen in the subject line so I don't like auto delete your email.
I should rebuy my pen for that interview.
You should rebuy it.
Yeah, I remember I sold it up there at 83.84 because I thought it was. Now it's come back down $8-9. I should rebuy my pen. I've been wanting to rebuy my pen. Maybe he'll talk me into
Maybe buy it out. Maybe wait.
Maybe he'll talk.
Maybe wait till the interview.
What? It's not like I'm gonna be, So yeah. So anyways, we'll see how it goes tomorrow with the interview. Maybe he'll talk me into rebuying my pen.
All right. It is 8:15 on a Thursday. It is time for our guest. Let's bring on Marc Chaikin, a.k.a. Marc C. I think that's his rapper name. Marc, how are we doing today?
I wish. We're doing well. How are you? Happy New Year, Spencer.
Thank you. Same to you.
You too, Dennis. But we'll make.
Do you read any of those books, Marc, behind you? Have you read all those books?
I've read every one of them. I know.
Oh, really? Okay, give us 3 titles of books, and give us three books that we should go out and read if we haven't read any trading books.
Larry McMillan on options. Relative Strength Concept of Investing. That's out of print.
Out of print?
Yeah.
I'll get it from Marc. He'll borrow it from Marc.
1960s.
Send him an
Yeah.
email.
I mean, anything that helps you combine fundamentals with technicals.
Cool.
Okay.
Can't do it. So Penn National Gaming, bearish power gauge rating since March at $100.
It still remains bearish.
Yeah, it remains bearish.
So I shouldn't get talked into it tomorrow.
Well, and, you may learn something. It's been underperforming the market, obviously. Rallied up to our long-term trend line at about 84. Money flow is strong. So there's some, Chaikin money flow shows that there's some accumulation going on.
So when does your, and you don't have to give the secret sauce, but, you see accumulation coming in here. When would, or do you even know, it's all in the algorithm, like when it would actually flip to, because you've been bearish, when would it flip to bullish? So you see accumulation, that's got to be one, reason to try to start flipping bullish. What other factors are involved?
Yeah, there's 20 factors. So I look at the 4 components. The earnings component is actually bullish, but it's the expert opinions and the technicals that are dragging it down. So big short interest. The industry sucks. Pardon my French.
Yeah, it really does right now.
But they're in a different part of the industry. It's not overseas exposure.
That's the kick. That's the kicker, right? No overseas, aka China exposure. That should make them the best of breed right now.
And the insiders are buying, but the 20 factors all sort of weigh against it. So I think pretty tough for this to turn bullish. And the financials, a lot of debt. And on a relative basis, I think there are better places for your money.
There's easier places for your money. Give us a couple of those places, Marc. If you're looking here, and I'm kind of looking at buying the S&P dip a little bit here just because I'm sitting with so much cash. Where are you looking? What stocks?
Well, let's talk about buying the dip here as opposed to not buying the dip before we get into that. Okay. This is the 9th time this year that we're testing the 50-day average on the SPY.
9 times.
9 times. 8 times it's worked. So the 50-day average is at 44.30. We didn't quite get there yesterday, but I think if it's going to break, this is the time it's going to break.
Look, this is what Marc is talking about. Look at this chart. The dark blue line is what Marc's talking about. The 9th time this year, he says.
Yep.
Look at this. Let me zoom in. I'll make a little.
But the interesting thing about the SPY is the Reddit traders are now buying QQQ and SPY on dips in addition to these crazy stocks like IronNet. I don't know if you've talked about IronNet.
We just mentioned it about a couple of minutes before. I haven't talked it yet today, but
it doubled in a day.
Because I know it's crazy
on a disappointing earnings report, except they have more customers than people expected. But the
Reddit
bottom line
stocks
is,
do their own thing.
Yeah, but here's the thing. You're in a period between now and October 13th when earnings season begins where the headlines are going to be dominated by tax debate. And yesterday, I don't know if you talked about the proposed tax changes for ETFs. That could derail this whole ETF move.
What are those?
Yeah, well, Ron Wyden has proposed that the capital gains sort of swap exemption goes away. I don't think it'll pass because it affects everybody from small traders to large investors. But that would basically submarine the whole ETF growth concept. And that impacts the overall market because that's SPY and QQQ. So basically, if you liquidate an ETF, you don't have a capital gains implication. It's a big deal.
To your point, and like the ETF thing is like that's what makes it great for everyone. That's what makes it a tax efficient vehicle. And there are like weird like tax intricacies of ETFs. Like if you want to Google like a heartbeat trade,
exactly
to learn like that is a loophole, but it is a legal loophole that helps everybody.
Well, Ron Wyden, who's the head of the Finance Committee, wants to close that loophole, and others. So why is this important? Because we're in a 3.5 to 4 week period when earnings aren't going to dominate, but tax policy is. And I don't think the market has factored in tax increases. One of the big investment banks did a study, and they said 2/3 of analysts haven't factored a tax increase into their earnings estimates. And earnings estimates revisions have driven this bull market along with stock buybacks. So if we're going to be debating these oddball proposals like an excise tax on buybacks and closing the ETF loophole, I think the market is vulnerable here. And maybe the buy the dip guys don't get paid off this time. As Charlie Munger said, and I quoted this in my market letter, if investing were easy, we'd all be rich.
Marc, if you could read between the tea leaves here, do you think that maybe the changes in tax policy is one of the things behind Microsoft's big buyback yesterday?
Could be.
Right,
I don't think they're going to put an excise tax on buybacks, but hey, they're bandying about everything to try and get to some compromise consensus. But the reason I'm concerned at this 50-day test is because it's been too easy for everybody. No offense intended, Dennis. It's worked. So if it's working, do it. But so
you got to stop yourself out. I think the main thing is if you are going to buy off the 50-day, if you are going to buy off yesterday's lows, I mean, just have your defined risk. I mean, if it takes it out, okay, you risk yourself 2-3% through it and say, okay, I was wrong, and take your 3% loss and move on. So many people won't do that, though. They'll buy off the 50-day and they'll cut through, and they're like, well, I can't sell at a loss, and then they just hold on, and then they're in trouble. So, I mean, it's worked 8 times. It might work 9 times. It might work 10 times. I once, went in a trade on ExxonMobil. It was down 21 out of 22 consecutive days. I mean, so you can, these trends can be persistent, but at the same time, when they break, it can get ugly too. So a lot of people leaning on that 50-day, it could be a very crowded trade to your point. So if it does take it out, I wouldn't sit around, for letting the dust settle on it.
I agree with you there. So what would I be buying? Well, some of my favorites have come down, like Fortinet. Cybersecurity is still top of mind for me. So Fortinet's come down. You have to be a big bull to buy it here because obviously it's richly priced. But there are a lot of stocks that look like Fortinet. So I also think that the medical testing companies like Charles River Labs and Quest are going to get a second win because of Biden's vaccine mandate. And people are getting a lot more comfortable with at-home testing. And so I think there's going to be a lot of testing for not just COVID, but other things. And I would revisit some of these, testing companies. They're still looking strong, like Charles River Labs and Quest. But my favorite right now, and it's bucking a big industry trend, is Skyline Homes, SKY. The reason I like it is that we know there's a big lack of supply in the home building space. It's got to be filled, but we've also got cost concerns and supply chain issues. So Skyline manufactures homes in a factory and ships them to the site. And it's maintained an uptrend where all the home builders, the conventional home builders like D.R. Horton, like Lennar, have really been in, and Pulte Homes have been in very steep downtrends. So I normally don't like to buck an industry trend, but we know there's long-term demand for housing. They cited a $5 million shortfall in terms of housing. based on population growth over the last 10 years. So I like Skyline. It's maintained that uptrend, bullish power gauge, strong money flow.
Marc, you're the second person this week on our show to pitch the home builders in some variety.
Well, it's because of this long-term demand, but there's no denying that the short-term downtrends are pretty steep. If you put up Lennar, which is the poster child for the whole group, or Pulte, which is a little more leveraged, you see that you're really buying into a hole if you buy them here. So can we get a chart up of that? Or we're not interested.
We're missing Joel, so
Lennar, yeah, that's all right.
Wait, I'm sorry. I'm focused on a few things. You want Lennar, Pulte?
Yeah. So there's your downtrend. It's breaking support. You've got lower highs and lower lows now, which, by the way, if we break 4430 on the S&P, the key number is 4360. That was the August low. And if you break that August low, then you've set up the potential for lower highs and lower lows. The thing that's kept me bullish all year is higher highs and higher lows in the S&P. And you really don't want to see that pattern break. Could it be a fake out? Sure, but it sets up all sorts of negative divergences going forward. So still bullish into year end, but cautious in the short term until maybe the first week in October.
A couple questions here from chat. Marc, I don't know if how focused you are. Similar to the home builder theme, I don't know how focused you are on real estate right now. There's a question about AEI homes, ticker AEI. I don't know if you.
Let me take a look. That is a name I do not know. But
whoa! I didn't realize how.
This was, I think, social media Reddit stock. Maybe if you look back to February, you just look at the chart. February,
I realized that
$5 to $30. So, and it's been, in the gutter ever since. I've been saying this. It seems like these Reddit stocks, it seems like the majority of them, when the dust settles, end up going down, but they get the pop, they get the initial love, the hype, and they really rally. You got to get out while the getting's good, though.
I did not realize that. Marc, there's also a question about China. I don't know if you've been watching what's going on over there with Evergrande and the largest real estate developer in the country defaulting on their debt. Maybe soon, any day now. Do you have any thoughts on the macro implications of that? I mean, there's obviously 10,000 things happening in China right now, but this is just one of them. But are you factoring that in at all?
Well, it's only $300 billion in debt. So why are we getting upset about that? China's a landmine, minefield right now.
Yeah.
Could it pull down the global economy? Maybe. I think the biggest issue in China is, can they maintain the zero COVID policy? And, we had a major port shut down because they shut down a city where the ships depart from. And, it could affect global trade. But other than JD.com, I haven't been a big fan of any of the Chinese stocks. And actually, JD, I think, is still in an uptrend. But I think it's a macro factor that the market will figure out, and so I'd rather just look at the S&P and see where that's going.
Yes, I admire your decision to not get in the weeds in this thing, because it's impossible to even if you are in the storm, it's impossible to understand the implications of it, and so. I admire your simplicity. I look at the S&P, see where it goes. That's your leader.
That's it. China's above my pay grade.
Yeah,
well, it's so tough. I mean, you just don't know. Like, you can have the best technical setup in China in the world, and then all of a sudden, some political issue comes in your sector, like the casinos, and then they, pull the rug out from under you. And not saying it was a bad example, because casinos were technically breaking down before that, but. I mean, this is pulling the rug out from underneath their public companies on a continuous basis. Makes me not that hungry to invest there.
Oh, I wouldn't go near it. People are going to see opportunities, but good luck.
Who was it in the chat that just asked this question? Oh, whatever make you happy in the chat is asking if is the money flow indicator named after Marc? Marc,
yeah, it is.
You named it after yourself.
Yeah, because my kids were like in their teens, and I was staying up till 4 a.m. on an Apple II computer, working this out on software out of New Orleans. And I figured if I put my name on it, someday they might understand why I was so crazy. And that's actually the way got the name, but Larry Williams was my inspiration. So you had Williams accumulation distribution, and I built the Chaikin money flow based on his conceptuals. So credit where credit's due. And Larry's still going at it. It's amazing.
And so are you, and we appreciate it. Marc Chaikin joins us every other Thursday to give us his thoughts, macro and micro, on the market, stocks he likes, stocks he doesn't. We always appreciate his analysis. Marc, thanks a lot. Have a good rest of your day. We will see you in a couple of weeks.
Be well, Dennis. Good to be
right.
with you.
Thanks, Marc. Let's
talk about Tesla for just a second here, because Cathie Wood, ARK Invest is a more fair thing to say. ARK Invest sold more Tesla yesterday.
Sells every day.
Sold another $62 million worth of shares. They have sold a little over about $266 million worth of Tesla this month. Now, I know some of you are going to say, well, sure, they're allowed to do that. They're an actively managed ETF. They have rules about how big a stock can be in one of their funds, and that's all fine and dandy. But it is a little bit hard. It's a hard circle to square when, on the one hand, you are giving these price targets, right? 5,000, 10,000, whatever, for Tesla.
Yeah.
And on the other hand, you're running an actively managed fund that has rules that can require you to sell at certain times, right? And not to say it's...
I don't think there's any rule that she has to sell Tesla at any time. I mean, there was somebody calling her out on Twitter, calling this a flat out pump and dump. I mean, there's, I'm not saying that, but I don't think it's about that, because she has so much Tesla, it's not worth it to her. But does it appear, could the media grab that headline and run with it when she's out there saying, yeah, Tesla's going to 3,000, rah, 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 and then you're selling it every day? I mean, it doesn't look good. That's the one thing that doesn't look good. So, I mean, I get it. She's rebalancing. Tesla's such a huge portion of her portfolio that she's probably just lightening up on a continuous basis, because Tesla's grown into this monster in her portfolio. I mean, what is Tesla and ARK? Do we know what percentage it is? It's just enormous, though.
I'd have to look it up.
It's enormous. Maybe we can ask Siri.
Yeah. Did you ask Siri? Is that what you said?
Yeah.
No, here. I'll pull it up right now. It's like, it's over 10%.
Yeah, right? So it's over 10%. I mean, she wants more. And what's the second largest holding? Let's just give her perspective.
In the flagship, the ARKK, it's Teladoc.
And how big is that?
5%.
Yeah, so you're looking at the first holdings over double. So she's just trying to get her weighting better. So I get it. I don't think there's anything nefarious happening here. But does it look bad that you're saying 3,000 and you're selling the stock every day? Yeah, it kind of does.
Yeah, I'm not. No one here is saying like it's
no.
illegal.
No, there is people saying it. That's the difference. I've seen reading online, and you know what? They have a point. It does appear that way.
It just looks weird. It looks weird.
Holy mackerel! What you got? You throw me on the bus, not telling me it's an 8:30 number.
Sorry, I'm
Cancel
sorry.
all orders.
I'm sorry.
Feld.
I'm sorry. Yeah,
cancel all orders as we're trying to make a point on.
I'm sorry. Yeah, we just had we just had retail sales for August. I didn't think it was going to move that much. Retail sales.
Macro.
Retail sales.
I told buy the dip, and the dip just went away.
Retail sales for the month of August up 0.7% compared to a negative 0.8% expectation. That combined with lower jobless claims than expected for last week is what is behind that move in the last 3 minutes here. But yeah, we just had weak retail sales in China, and now for August, and now strong retail sales in the U.S. for August.
Dip gone.
Sorry about that.
Next time we'll try to buy the dip sooner, I guess. So
yeah, I didn't think retail sales was gonna be. Look, there's your move right there in the SPY, right?
I mean, that was a big move.
Yeah.
I was watching, and I'm trying to explain a point. And I'm watching S&Ps go up 1, 2, 3, 4. We were had 10 handles on that. We were down at 446.50 on the SPY. Now we're up at 447.50. So it's a nice lift. It was a nice lift off of that number there. So again, you got to just have setups. I mean, it felt more like a buy the dip, and we're going to bail out maybe by a jobless claims number here, which, I didn't realize jobless claims or retail sales and jobless claims. So
jobless claims is every Thursday, but I mean, how often? We haven't moved. That hasn't moved the market in 6 months. I feel like
retail sales up significantly. So anyway,
nice rally. Hey, on the topic of retail sales, everyone consider this your warning. you should seriously start thinking about Christmas presents now. Because this is not the year to wait until.
Is there going to be nothing in the stores?
This is not the year to wait till
Are the stores going to be empty?
December 20th. This is not the year to do that. Pull it forward. Pull the holiday sales, the holiday shopping forward, because it everything that I'm seeing is it could take a while to get your present. So Christmas is actually 100 days away from today. So you have a 100-day warning. I'm giving you.
I always wait till the day before.
I'm giving you a 100-day heads up.
I have the luxury of only having to buy for my wife because she buys for every other person in our families, including my side of the family. So, so I only have one person to worry about, and I usually worry about that on December 23rd. But maybe I got to go look early if the stores are going to be empty.
Mitch is angry in the chat. Consider this your 100-day warning. That's all I'm saying, and I'm not going to say it again. Okay, moving on. Yeah, we're still going up here off that retail sales print. Let's talk about some ratings, and we'll start with BeyondMeat because downgrade this morning. Yeah. JP Morgan downgrading.
It's the big rating of the day. I shorted it on the rating. It came out last night. I don't know why I didn't want to trade below 110 last night on this, but I was like, I think it's going to go down more than 80 cents. I've covered most of it. I kept a small piece on just because I'm looking at this chart and thinking there's not much in there till $100. So I have a small size position on now. It was a large short last night. It's a small short now because it's come in $4, but I still am short a piece. And I'm just looking at the chart and saying, heck, it's taken out the double bottom. There's not much in there. It's probably going to get major analysts or major media coverage because it's the big rating of the day, really. So I don't know. We'll see. If you had this on for a swing short and I have it on for an overnight short just because of the rating, my target would be $100. So I don't know if I want to turn an overnight trade into a swing short or not, but $100, it looks like big support down there, 100, 101. That's a long ways away. It's probably not going to get there. I'm not saying it's getting there today, but does have the potential to get there in the next week or two or, sooner? Potentially. I wouldn't want to be long it.
So I've got every BeyondMeat rating in Benzinga Pro. You can see the top one, right, is this morning Piper Sandler downgrading, not just to neutral, but to underweight.
Yeah, when you get the sell rating on it, that gets them spooked.
And price target lowered from 120 down to 95. Underweight is more interesting to me than the price target. But you can see here, like a lot of red on the screen, right? Like if you
a lot of people don't like the stock.
Right. So if you scroll down, right, because this is sort of a chronological order, you scroll down to 2019, you can see way more green, right? We got some outperforms to some buys, yada, yada, yada. So, fast forward a couple years, and the sentiment has turned.
Okay, so here, I want you to help me with the Pro because the Pro made changes a little while ago.
Yeah,
they have a lot of Pro users.
Yeah.
When I type BeyondMeat in my Pro, I only get to days.
Okay.
So how do I get to see everything that you're seeing?
See, like the calendar, there's next to where it says reset filters.
Yeah.
There's a little calendar thing. You have to click that and click all, right? Where it says all.
Where it does say all.
Right.
Okay, and then you got all the ratings changes.
And then you got to sort it by. You can sort by date. You can sort by name. You can sort by.
I can grab it and sort by date, and then it'll show me all the latest ones, which you're looking at right now. I see in the last one. Who upgraded it? Bernstein. Back how they do back on May
24th.
What's BeyondMeat done? I think that was probably a bad one, but let's see what this does. It's May 24th.
Maybe.
Yeah. No. Sorry, Bernstein. It was 100 and. Well, actually, they had a big candle in there. It was probably their rating that was driving it up that day. But so not such a great call. So I don't know. I haven't liked the stock for a long time. So that's just my opinion on it.
I would just say this on BeyondMeat. Every time I'm in the store, I see their products on for sale. Like
it's on sale.
It's always on sale.
There's a million of these veggie burgers now.
Yeah.
And you know what? The BeyondMeat ones are pretty good, but I like those Costco ones too. So
I haven't had those yet. But I've bought these like once or twice. I didn't pay full price. They were like significantly marked down both times.
Maybe I just remember Marc Yusko on our show, and this was obviously, he was involved in this stock before it had the IPO, and he was in the lockup expiration. And he said, as soon as the lockup expiration ended, I was trying to sell this stock as fast as I possibly could.
He said that, yep.
And he's one of the original investors. He's like, I'm getting out of this as fast as I could because it just got stupid. Got to $221, the market cap, like eclipsing, I think it was eclipsing like Tyson Foods, like, and where is it now? Like, where is the market cap on this thing? Again, I do have a small position on it, which is a trading position. So, I don't know,
$7 billion.
$7 billion.
Yeah, that's what Pro says.
Still worth a lot of money, man. What's Tyson market cap? Just saying that the producer 27 bill.
27?
But at one point in time, Beyond Meat's market cap was approaching Tyson Foods. And it's like, okay, you have a company that literally Tyson Foods, make, like, obviously it's chicken, but they make so much other stuff too. I mean, let's look at Tyson Foods portfolio. And this is what sometimes you just got to do. Is this rational? Does this make sense? Just do, if you're investing in Beyond Meat and saying, oh yeah, this is the next thing, should it be worth the comparative methods? This is how they do real estate. You're always comparing. Does it make sense that this Beyond Meat with this veggie burger, is going to have a market cap eclipsing that of Tyson Foods? You look at the brands of Tyson Foods and you think, yes, chicken, but there is the brands. There's like 30 of them on there. Ballpark Beef Franks, Sara Lee. You think about everything that Tyson Foods makes, and you're going to pay as much for this veggie burger maker as you are, this company that makes, all these Hershey Farms. There's just so many different brands in there. And you got to say, I don't know if that does make sense. And that's why, I wouldn't have invested in Beyond Meat at 200, probably not at 100. Does it make sense at a $2 billion market cap? Maybe. But does it make sense at a $20 billion market cap, which when it got up to the $220 it was? And again, until we look at Tyson Foods, then I believe I saw the headline that it was getting close or eclipsing that of Tyson Foods. So always use that comparative method to a certain extent. It did not work with Ford, GM, and Tesla. I will say that, before somebody yells at me about that, because I did that method saying, wow, you got a car maker that's making 5% of the cars, but obviously Tesla's his own animal, does its own thing. But a lot of times when I'm doing long-term investing, I look at, comparatively, how does this make sense? Where can this company grow to? Is it all hype? Did it make sense that Tilray was $300 a share? Did it make sense that all these pot stocks, with greenhouses, that, a greenhouse with pot plants is worth, 100 or worth $10 billion, but a greenhouse, the same greenhouse with tomato plants, is worth $10 million. Does that make sense? It doesn't to me. And that's why I didn't touch any of the pot stocks. I was wrong for a long time. They expanded, they kept going up, but eventually, logic holds. So, maybe, fundamentals, you don't trade on fundamentals, you just trade on momentum, and you can trade anything. But just be careful when you're throwing stuff in your long-term investing account. It's sometimes a good exercise to just logically think it through.
Here's just a chart of Beyond Meat is in purple. Tyson is the candles, right? You can just see going back, a few years here, the volatility in Beyond Meat and the relative steadiness of Tyson over that time.
Wow, it's relatively steady because you're comparing it to Beyond Meat, which is wild.
Just messing around.
So
some other ratings. Let's go to the rest of the ratings calendar for the day here. There wasn't that much. Let me go to sort by action here. There we go. Let's do just
the casinos we already talked about. They all got downgraded, and I said I would actually be if I was making a trade, I made a trade on any of these things, I'd be looking at actually buying the dip and leaning out on yesterday's lows. So we talked those.
Okay, Signet upgraded Wells Fargo to overweight. American Express, Avis, DoorDash, and Dana upgraded at Bank America, mostly to buy there.
Yeah.
What else do we have as far as downgrades? Oh, the Fisker down. Bank America downgraded Fisker and Ride, Lordstown Motors, and Lear and Visteon. But Fisker and Ride, the ones that jump out to me, both to underperform. I'm sorry, Fisker to neutral, Ride to underperform. Thanks a lot for that.
My two worst buys got to be Las Vegas Sands and Fisker in the long term account. The last 3-4 months. Although my SMG isn't looking great either. My buddy Alex pointed out that it had a bad day yesterday or the day before, and I'm like, oh, that one's not working out either. I mean, these trends are pesky. Again, I stuck them in the long term account. We'll see how they look in the long term. I didn't have those on for trades, but.
Yeah, you gotta know. People ask me about I get asked about pot stocks and SoFi all the time, and it's like I know they're in a long term. I'm not this is long term.
Know why you're going in the trade.
Yeah,
and I try to separate it as much as I can. Again, sometimes I find myself trading my long term investments, which is just an absolute no. I mean, it's such a difficult exercise. And if I just actively traded my long term investment all the time, I would never get those huge winners that make your whole portfolio. And you always, you see people, it's like, oh, I got an Apple, and some people like Jason Rasmussen saying he's in at 16. My average cost basis on Apple is $25. If I'd be actively trading in and out, which I do in, my day trading account, but in my long-term account, if I was to say, I would have been a long gone, and you never get that 500% gain. Biogen, another one. I've got about maybe, a dozen stocks where I'm up 300, 400, 500%. Google's another one. My average cost basis on Google is $250.
Very
so
nice.
I'm like 1,200% on that. But, it's a company that I believed in, and I just wanted to have a core holding, all the way. I did sell half of it actually on the way up, which I wish I wouldn't have sold any of it. But I sold half of my Google when it got to like 1,000.
That
it was like a 400 up 300% or whatever it was. I shouldn't have sold any. That
Google IPO, I'm obviously too young to remember the IPO, but it IPO'd in 2004, correct? And that was not a good time for tech stocks.
Oh no, every search engine was going down too.
Yeah.
It wasn't a slam dunk to just go buy Google and it was going to be this
it seems so obvious now, but at the time that was a really bad time.
There was Lycos, think of Yahoo was the big one then. There was Lycos, Excite. Remember Excite? Anybody remember searching on Excite?
I've never even heard of that one before.
Yeah, there was like the four. Who are they? So chat, help me out. There was Yahoo, Lycos, Excite. What was the other one?
There's Ask Jeeves.
No, that was but I didn't include one of the big four. There was Ask Jeeves.
Ask Jeeves wasn't one of the big four. It wasn't my world.
Well, maybe in your world. Alta Vista, I think it was.
Alta Vista.
Web crawler, Netscape.
All
these ones. So there was so many different search engines, and a lot of them actually went down. A lot of them didn't make it.
Yeah.
So you look back and think, okay, well, why did Google make it? I just mean they took all these search engines that were doing everything wrong and they perfected it. The search engines had already created the wheel. Google just made it round and efficient. And they made it so efficient that Google became a verb. I'm going to go Google this. That's how efficient they made it. And obviously, Google's just done everything right ever since. And I love that company. That's why I still have a big piece. But if you were buying it, and I don't remember when I bought Google, I think I probably bought it back. It's got to be 10 years ago, but I was not early on it. I wasn't like in the 2004 camp when I bought this. I mean, you can go back and look, well, when did it trade $250? Because that's when I bought it. So go back to the chart and look, and you can try to figure out what year I bought this.
2005, no, 2006 looks like.
Yeah, well, I bought it after the financial crisis, I think.
Okay.
So go to 2008. How high did it get during 2008?
The high was
650.
Yeah, 6.
Now go down to like 2009 or 2010. I bought it when it dumped off. So keep going back. So it
looks like you bought it in around late.
Yeah, see 231, 230 right in there.
Somewhere
between 2010 2011. It got down to like under $200.
In 08, I'm seeing the low was 261.
Maybe I've held it longer than. Oh, you know what's screwing us up is the split too. Google and Google, because they were the same company. So I wonder if that doesn't screw up the charts too.
Maybe.
Yeah. Anyways, I just remember, that's where my pricing was. So
anyway.
Oh, you know what it was? Because it gave you both stocks. So that screws up my average cost basis too. So so they gave you both. So anyways, I remember that buying at 250, but then they had the the split and everything. So I don't know.
All right, I'm bringing us back here. There's one more thing I want to get on. Then we'll go to tickers from the chat. I forgot about EA this morning. We should talk about that. EA got hit yesterday and then came back at the close when they reaffirmed their guidance. But it got hit because let's go to a 550.
Why did it get hit? Yeah,
it got hit because fears of a delay of Battlefield 2042 were realized. They came out and said, we're delaying the launch of our game. This is the game that everyone's waiting for from October 22nd to November 19th. That's like a week or so before Black Friday. As long as they're still before Black Friday, it's probably okay in the grand scheme of things. But a 4-week delay on the launch of Battlefield 2042. There were rumors that this was going to happen. The company confirmed it yesterday. But then at the close, they reaffirmed their net bookings guidance for the year. So they said, really, there's not going to be any financial change for us as far as this delay is concerned. Michael Pachter had a note about it this morning. He's not particularly excited about EA right now. He's concerned about turnover in management and how that's affected both the timeline of games and the quality of games. But anyway, that was the reason for the EA move yesterday, was the delay in their next big title, Battlefield 2042, for a 4-week delay in the launch. And then they came out and they reaffirmed their guidance right at the close. So,
who bought this at 144 after hours? Do you see that little candle zoom in? Somebody paid 144 on that headline.
Minute
It's
chart.
ripped. I mean, here you got a stock that gets hammered all the way down from 144 to 136, and you buy it all the way back up to the where it was, where all the resistance is. That's dumb money right there. That's what I'd been fading. I didn't even I noticed the A in the filter, but I didn't go over to trade it. But man, that 144, 143, 142 is a gift. I honestly still think 140 is a gift. Even we got all the video gamers that have really been in the gutter. Take-Two I own. It's the only one I have left, and it's been a dog. I'm in from $100, so you know I'm in cheap, but I mean it got over 200. I should have sold half, and I playing with the house's money. That's what I often do, but I didn't. But EA has just been sitting here in a trading range, and it's really stuck in a trading range. You know, low end 135, upper end like 147, 148. We basically just traded that entire range yesterday, tanking all the way down and then rallying all the way back up. So I think the seller's all over the place above 142, above yesterday's high. So I'd actually be more inclined to sell this rip as opposed to buy the dip. You know, obviously I'm always inclined to sell the rip, but in this case is all kinds of overhead supply up there too. So I'd be selling the rip.
From the Pactor note about this, just as a reminder, some context, Battlefield 5, the last version of this game, sold 7.3 million units in the quarter in which the game launched, and that figure was 1 million less than they were expecting. So the last version of this game didn't perform as well out of the gates. Again, that it wasn't. It was only launched a couple of days before Black Friday. This time they should launch a full week before Black Friday if they stick to their timeline, which we'll see. So that was the reason for EA weakness yesterday. But as you said, Dennis, the whole sector is sort of stuck. EA actually is trading range looks good right now compared to the other ones. So
well, yeah, the other ones have been hit pretty well. Take-Two's been hit the hardest. Activision.
I know
this
doesn't look
Activision Blizzard continues to go down. I do want to rebuy my ATVI somewhere somehow, but I sold it way early. I sold like 81 or 82, and it went up over $100. It's back down to where I sold it, but I'd like to get it back down to low 70s. I'm not sure I'm going to get it, so I'm interested in rebuying some of these stocks.
Okay,
not EA today. Definitely not EA today.
All right, it is 8:51. Let's do some ticker time. There's a few that I was able to write down already. Matt Miller asked about TMC, which is a high flyer.
Well, there's only 4 days of data.
No, there's not. Well, no.
Yeah. Was this SPAC before?
Not for I think
I have 4 days of data since it's traded TMC, so I have no idea how to trade something with 4 days of data. So.
Here's a summary of all these things. Whether it's TMC or what's the other one? Is IRNT?
IronNet is just like
right.
I am IronNet. Yeah, that was a bad
there and what I would recommend to anyone watching these is tune into SPACs Tech today every day, but Chris and Mitch are talking about this trade right now on a daily basis. There is a bit of a SPAC squeeze going on right now.
On this IronNet.
I don't really know why. Mitch and Chris would know more than we would, so I would just tune into that. But this is
a Reddit stock too. Reddit grabbed a hold of this thing.
They did.
So Reddit will grab a hold. Yeah, I think it was like the #1 stock. I don't know if that's true or not, but somebody on social media said this is like the #1 stock mentioned on Reddit or something the last couple days. So I mean, again, what we started the show with saying is that it seems like Reddit grabs a hold of these stocks. They go up for a few days, maybe even a week or two, and then they crash and burn. So I don't know where this thing crashes and burns from. Maybe it's going to be 42. Maybe it's going to be 92. I don't know. I don't know the path to get there, but I do believe eventually it will crash and burn. So, and I think when you look at this thing 6 months from now, I think it's probably under $15. Not joking. That's where I think it's heading. So I would not put it in my long-term portfolio, but as a trade, you can put anything on. So just like we were saying, I made that prediction with, what was the SPRT? The stock was $37 in the pre-market. But now it's obviously something else. It's changed or whatever to greed or whatever it is. You had 4, 5, 6, 7 days, and then you had the huge capitulation day. And then the next day, I'm looking and saying, okay, well, I think we had upside capitulation, so now is the time to sell. Like, if you're still in it, you got to get out. It's time to get out while the getting's good. That was when it was like $39. Later, even that day, it was $29, and obviously got down to $11. So, I mean, I think when you look at this SPRT chart, I think that's what the iron net chart will look like too eventually. So, no, I'm not chasing the move. Can you trade it? You can trade anything you want. Maybe it's going to go to 60. Maybe it's going to go to 70. Maybe it's going to go to 80. I don't know the path to get there, but I think eventually it goes back down to like $15 or $10 even. So, no, I'm not interested in sticking these in my long-term portfolio.
We talked about buying the dip at the top of the show. What about Alibaba here? This is from Marcio.
I want to buy it. I want to buy for the simple reason is that I sold a bunch of stock up at 230 and I could rebuy all that stock I sold. The one thing keeps me out is just this political risk. And it's like every time I don't buy, I want to buy to 170. I want to buy to 160. I want to buy 150. Every day I wait, it's better. So it's a better, and I still own the little half piece, as I was talking about the piece I sold. You have the level to lean on, 152.80. So if you're putting it on for a trade, you have defined risk here. 155, yesterday's low, 153.92. That's nice too. So you have some levels to lean on here. It just seems like everyday China stocks are just getting hit. And I mean, what's up with Baidu? Because it's rallied up, but it has not given back hardly anything, and JD too. So I don't know. Baba's been relatively weak relative to the other ones as well, which isn't a great sign. I will say you have a huge level though at $150, so it's huge. You're only 5 points off of it right now. Does the trade set up for a potential bounce? Maybe. Again, you're buying weakness, which is always dangerous. Everything's dangerous.
On the same note of buying the dip, would you consider buying the dip in Kroger here? This is from.
Yeah, I would.
This is from.
I actually considered buying the dip enough to write it on my watch list. Like writing it. I have like a sheet where I've got Zynga written on it because I already talked about that potential. To put in like the swing trading / long-term portfolio. I talked about the Kroger 42. I took it out yesterday. Does it have a date with 40? It's come far enough down now, maybe. I mean, Buffett's in this. I've been in those stores. They've turned those Kroger stores around. They feel like a Walmart. I mean, they've done a lot of things right with Kroger.
Maybe your Kroger.
You don't think they feel like some of these super Krogers or whatever they call them? These are nice stores, man.
Okay.
I'm impressed with Kroger.
That's the catch, is they have to rebrand it as a super Kroger, like a super Walmart, right?
I don't know if they call it super Kroger, but I made that up. Maybe they do call it super Kroger. But I tell you, I was in one, and obviously I haven't been in the States for a while because we're not allowed to cross the border. Canadians, we all have COVID up here. But that's a joke. But
wait, I think you are allowed in.
I got to fly in.
You got to fly
on essential business. You can fly across the border, or you have to go, if you're driving, you have to be on essential business.
Yeah.
So I don't know if going Krogering is essential business, so I don't know if they're going to let me do that. But Kroger Marketplace, somebody was saying it's called, not Super Kroger. I like Super Kroger, although Super K didn't work very well. $40, a big level. I kind of like the idea here that you had the big move from 30 to 48. Now you get the 50% retracement back to 40. Like nice whole round number here. I might add some in the 40. I don't have any right now. I might add it into the long-term portfolio at 40. I kind of like it.
What about, here's one, Ecolab, ECL. My old neighbor growing up used to work for Ecolab, and I always used to see his truck in the driveway, and as a dumb 8-year-old, I thought it was pronounced Ecolab. That's my Ecolab story. But Dennis, do you have any thoughts on?
I mean, this is a COVID play too, right?
Yeah.
So with the testing, so it's really struggling as a problem. 230. I'm looking out. Go out to the monthlies. Oh, you're looking at, that's a perfect chart. Look at that 230 level.
Yeah.
Look how much resistance is up here. It's like 1, 2, 3, 4, 5 times it's tried and it can't get through there. And now, it's like trying not to get it again. I know somebody's looking at the tick here today and saying, oh my gosh, it's down $15. It's just some, that's what you call an off exchange market maker getting, 15 points off somebody, because that was an off exchange trade. Somebody just sent an order in the pre-market here and they printed it down $15 because the best bid at the time was 208.52 and they can take it down to the best bid. So be careful trading the pre-market. It's not going to open anywhere close there today. It's already bid 215. I'd imagine it's not even going to open down. I don't think there's a headline on here. So somebody just got a really bad trade. And if you're the one that sold at 208.52, I'd be calling my broker and saying W2 at TF, and maybe they can do you an adjustment or something on that, because that's a brutal off exchange market. So just as much as we were, talking off exchange market making, they can print at the best bid even in the pre-market there. So if somebody comes in just to sell it into their system and just wants to get out, they can take it all the way down to the best bid. And at 803, the best bid on this thing was 208.52. There was just no market in it yet. So basically no buyers, and they printed it down $15. That's brutal.
Yeah, that's
brutal print.
That's unfortunate.
Brutal print. So that's a FINRA print. That's an off-exchange market maker that bought 100 shares down there, and somebody's lost $1,500. So I'd be complaining if I sold that down there.
Dennis, any final thoughts as we wrap up the hour here?
I was buying the dip, but the dip went away. So
now you got to sell the
buying the dip. We're down 12 handles. Now we're down 3. So I guess, if you bought the dip, you're holding on here. I tend to think, I'm more in the buy the dip camp here right now. Big day tomorrow. Lots can happen. Marc's saying another 50 days being tested. Can it, hold again? Well, it's held 8-9 times. It can hold 10 times too. So I always go with trend as your friend. Maybe it's going to hold 10 times. Maybe it's going to be the 9th time. I'm not going to be the person that's going to say buy the dip isn't going to work this time though. So I'm buying it.
Yeah, that's it. All right. That's going to be a wrap for Dennis. I'm gonna hang out here for a few because our next guest, Peter Tuchman, should be joining us. Oh, there he is. Great. Our next guest, Peter, was trapped in an elevator at the New York Stock Exchange, but he's out now. He made it. Peter Tuchman. Oh man, this is exciting. It has been an exciting morning here. Peter, are you okay?
Yeah, I'm okay. I'm okay. I have a crew here from Mexico visiting who I'm taking around from BBVA, and we all got too many of us in the elevator and we got stuck. It was great.
How long were you stuck for?
I don't know, 4 minutes, 5 minutes. It was okay.
Okay, quick tangent.
We know each other much better.
Quick tangent. I have been stuck. I've been stuck inside an elevator, and 20 years ago, I also had elevator doors close on me, which was a traumatic experience. But we'll talk about that another day. Peter, I see you back on the floor. What's the mood like down there? We were just talking about buying the dip, and it works again. And so, what is the mood down there on the floor of the NYSE?
So you know what? Look, yesterday we haven't had an IPO here for a while or a SPAC. Yep. Right, we sort of coasted through August and September. The floor, though busy and relevant as it always is, was really not seeing any new fresh fish to play with. But yesterday, 2 IPOs, which did incredibly well. Right, we had ON, the sneaker company, backed by Roger Federer, and they went public. It's a Swiss sneaker company, and they did really beautifully. Opening solid, rallied about $1 and change afterwards. And then we had Dutch Brothers, which is a coffee chain from out west. I guess they cover about 11 states. The stock opened and went up friggin' $8. It was amazing, the appetite. So they have sort of a unique business model. It's sort of a small franchise out west thing, whatever it is. It just was nice to see the appetite for IPOs, and the stock did really beautifully for the first day. It was a solid opening, up about 8 and then rallied another 8. So, for me, IPOs are exciting. I think they're one of the things we do here really well at the stock exchange. And I think it really does give you a sense of where the appetite is for the markets. We had that months and months where, SPACs were the flavor of the moment. They've gone sort of by the wayside because there's just not enough companies to take over anymore. So when companies are coming back in September 2021, going public with that kind of response, first day out, I'm impressed. It gives me a good feeling. We got 2 more today, sir.
But what is the feeling as far as the overall market is concerned, though? Is more what I meant.
Yeah, okay, fine. I'll give you the long way around it. Look, I'm a big proponent of the Rosh Hashanah Yom Kippur trade, right? So the old adage is that you sell on Rosh Hashanah, you buy back on Yom Kippur. It's not a financial one. It comes from the fact that Jews are to purge themselves of their assets into their redemption with Yom Kippur and atoning for sins and the New Year. And then you buy back on Yom Kippur. If you follow that trade and you shorted them or you liquidated positions on Sunday night or Monday of last week and you started to buy them back yesterday, you had a beautiful day. We did have 7 days down. Look, I'm not really sure. September historically is a down-ish month. There is the Rosh Hashanah trade. We are sort of at a point where we're waiting for option expiration on the quarter coming up on Friday. We are waiting for some more clarity on the Federal Reserve meeting of next week. And we are really wondering about the unknowns about the variant. So there are unknowns on the table. There is nothing to tell us that we need to go higher except the appetite for the market. And so I think we're sort of in a pullback consolidation phase, Spencer. I guess people are getting anxious about it because it happened 7 days in a row. Net percentage wise, it's really rather minimal. And I kind of think we're just churning. The market's churning and burning.
I want to ask you about tomorrow, specifically tomorrow after the close. We have an S&P rebalance. I know you're always active at the open.
Hear you.
Can you hear me now? Did we lose Peter? We may have lost Peter.
I'm back.
Okay.
Sorry, what'd you say?
I want to ask you about the S&P rebalance tomorrow. I know you're very active at the open and into the close. Talk about how you handle that.
So I don't look tomorrow. There is not a huge S&P rebalance tomorrow. It is more just a quad witch option trade. Okay. So look, when we have the rebalances, we just had one recently, a couple of weeks ago. We had the MSCI. It really depends on where markets are coming from. And to be perfectly honest, right now, the valuation in stocks does affect how much stocks are rebalanced within the indexes. So, it's kind of questionable. We are coming into the last couple of months here where we will see at the end of the month here a bigger S&P rebalance, as we will see once again in December. So you know what? I'm more interested to see what the option expiration happens tomorrow and where the market goes from here once we start seeing what happens with the Federal Reserve.
What kind of activity is it? Just a elevated volatility, elevated volume? Is there any specific pattern you've observed in as far as like how people behave like into the close on these days?
Absolutely. Look, you've got, when we have S&P rebalances, you've got financial institutions, you've got hedge funds and whatnot who have to rebound, and the indexers have to rebalance their positions due to the valuation of companies in the index. So you may have, 5 million shares of Amazon to buy. You may have 9 million shares of Apple to sell. In the old days, it was more of as we've always talked about, in the old days, you could really play earnings in anticipation of earnings, right? When earnings would come out and they had really set you up for a positive release, you were able to play into that. In the old days, you were also able to play into the indexers. When you knew down the week on a Friday,
Oh, did we lose Peter again?
I lost you again. Stay with me.
He's still stuck in the elevator, guys. No, he's back. He's back.
I'm still stuck. Pardon me, guys. I'm trying to find a little internet here. There you go. So in the old days, you used to be able to really trade into the S&P rebalances when you'd have 10 million of something or 30 million of something to buy or sell. Yeah. You could trade into it coming into the close. But you know what? All the trades are really crowded, Spencer. We're seeing it in the meme names. We're seeing it in the option trade. We're seeing it on the close. We're seeing it in earnings play. So as I just keep saying, this is a market that's not like it used to be. There is a lot of new people in the trade. People are swinging around big positions. So I think we treat everything a little bit with a grain of salt going into options, going into S&P rebalances, and going into earnings. For me, as we always say, price action's the key.
All right, Peter Tuchman, guys, is the Einstein of Wall Street. The link to his trading course, Wall Street Global Trading Academy, is in the description of this video. That's all I'm going to say. I'm not going to put it on the screen. You got to actually go to the description. It's there. I promise. Peter Tuchman, I'm so glad you got out of that elevator because I know what it's like to be stuck in one. It is not fun and very claustrophobic. So good to see you.
It's always a pleasure, Spence.
All right, we'll talk to you again next week. Have a good one. I was surprised. I asked Peter if he's working today because of the holiday, but he's working and I'm working and Marc's working and everyone's working because that's what we do. We can't stop and we won't stop. All right. I said at the top of the show, my goal today was 1,000 likes. We're not going to get there. We're only at 377. Can we at least get to 500 though? I think that's a pretty reasonable ask, right? 500 likes. That shouldn't be too hard. All right. As a reminder, we're still having the same problem we've had for the past couple of days. So what's going to happen is I'm going to end this stream and then I can't YouTube will not let me redirect you to the next show. So I'm going to put the link to our next show into the chat. I'm going to put it on the screen here. Live trading with Benzinga, myself, Money Mitch, Ryan Faluna, Zunaid. Here is the link in chat. There it is. Wait, there it is. Just put the link in there, and I'll pin it to the top as well, so no one misses it. And so when I end this stream, that's what's gonna start up at around 9:15 or so. You're gonna have to just go there yourself. Go to the link and go to youtube.com/Benzinga. That always works. youtube.com/Benzinga. That'll get you to the front page of our channel, and you'll be able to see what's live from there. So, can I bring Peter on again? Is that yeah? Peter joins us every Thursday, Manny. Every Thursday at 9. So we will get Peter on. Evil DJ Naverdi. It's a short YouTube. If only we could, I guess we could short Google, but why would we do that? Why would we short Google? That seems like a bad idea to me. Thank you, Imperial Fanatica. Appreciate the feedback. I know we didn't get to as many tickers in the chat, but hey, that's what our next show is for as well. So, yeah. Please remember, everyone, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. As a reminder, I'm always plugging our next events. We've got so many events on the calendar right now. In fact, let me just end with this. I'll end the show with a trailer for our next in-person event, the Cannabis Capital Conference, which is less than a month away in New York City. Check it out.